From the trading desk of DailyForex.com, this is Christopher Lewis looking at the upcoming February 20th Forex session. In front of you is the euro dollar, and you can see that it did have a positive session on Tuesday. And this would have been predicated upon the ZEW, the ZEW numbers coming out of Germany and Europe, which measure confidence coming out much higher than anticipated. Well, one of the biggest battles in economics is to simply make people confident enough to spend money. So that, of course, always has a positive effect. Also, the 133.50 level, and I really include this down to 133, is a fairly significant support level. All of a sudden, everybody went from being very interested in owning the euro to extraordinarily bearish, and quite frankly, I think it had been overdone. Looking at the charts, though, what I see is quite a bit of resistance at 135 going forward. So I think we're essentially going to be stuck in a bit of a consolidation area between 1.33 or so, maybe 350 and 1.35. This is essentially going to be a shorter term trader's market. I still believe in the longer term viability of the uptrend, though, because quite frankly, the ECB has made a few weak comments about having to monitor the value of the euro. That's essentially what got this sell off started. But they're amateurs. Remember, they have to go up against the Federal Reserve when it comes to devaluing the currency. They're way out of their league because there is probably only one central bank out there who actually can tangle with the Federal Reserve when it comes to killing their own currency, and that's in Japan. The Europeans have to get 17 countries together to do things that are going to be very drastic, while the Federal Reserve simply just hits the print button. So quite frankly, this is a race to the bottom that the Americans are going to win, if you can call it winning. So I still favor buying in this consolidation box, and then of course aggressively so once we get above.